Jerome, of course. Thank you for tuning in to my 2,948th edition of Short-Term Trading Live with Oscar Carboni. Traders, we got some stuff to talk about, right? We've got a Fed meeting this week. Stuff's going to happen. What are the markets going to do? What's Powell going to do? Let's see if we can figure this stuff out. Before we get involved in what's on the board, please remember that trading is risky, and can cause substantial financial loss if you get this wrong, which is why we put our sell or buy stops in first before we ever get into a live position. You should do the same. So, for trading on July 29th, 2025, it's a Tuesday. This is Fed meeting, day one of a two-day Fed meeting. On Wednesday, Jerome Powell comes out and talks about interest rates. Now, there is this. From watching, reading, paying attention, there's no reason to lower rates, but Jerome Powell feels like he's going to have to lower rates at the next meeting. Not this one, not tomorrow, no way on Wednesday. Next September coming, Powell's probably going to talk about maybe lowering rates. Now, I promise you, where our government is right now, where our economy is right now, it's not the rate that's at the problem with us. We need a rate at like 4.25. That's a good spot for the United States. And here is why. I would love to spend 30 minutes with Donald Trump. I love this guy for the politics that he has created for us so far. I've certainly been a backer of him since he started running the day way before he ever came off that elevator, right? But not everything that Donald Trump speaks about is right on target. And I'll tell you this right now, Trump, I would love to speak to you about this. You have been a builder for your whole life, right? With the exception of these last few years. Now, a builder is building buildings, and the types of buildings Donald Trump used to build were hundreds of millions of dollars. Now, if an interest rate moves this much when you're building a $100 million building, it matters dramatically to your bottom line, to everything that you're going to pay and do for that building. So interest rates really matter to builders. Donald Trump, we're not all builders, buddy. Not all of us are builders. Yeah, I've done some real estate in my life, but we're not all builders. And I promise you, we do not need rates at 1%, 2%, not even 3%. And here's why. We've got rates normally in this country, they hover at around 4.5. That's a good spot because, God forbid, we have another COVID. We have another 2008-9. We have another something that comes out of left field that we don't even expect. The Fed, what they do every time, 48 years of watching now, traders just around. This is what the Fed does every time. They quickly lower rates as fast as they can, which shovels money out into this country, makes it real easy to do business, and we recover. We recovered from 1987, thank you, Fed. We recovered from 2001, thank you, Fed. We recovered from 2008-9, thank you, Fed. We recovered from COVID, thank you, Fed. How does this happen? Well, the Fed basically lowers rates when they need to lower rates, but you should not lower rates just because a politician wants you to. Now, here's what my point is. We've got, let's call our interest rates at 4.25%, a gun with loaded bullets in the chamber. If right now there's no war against our economy, right? There's no COVID coming in. There's no 2008-9 crash. That's not happening. So we've got a weapon that we can use in case a war starts. God forbid something goes wrong. Powell can say, lower rates to 4%, 3%, 2%, 1%, and jack the country right back up. What do we do if we lower rates to 1% now during peacetime? What do we do if something comes out of left field? We're sitting at 1% because the president likes that. And what's the Fed going to do? Lower rates to negative so that when you put money in the bank, you got to pay the banks to hold it? That's not right. I promise you, Donald Trump, you're not looking at this correctly. The Fed is doing a great job. You know who you should be yelling at? The banks. The Fed, they have rates nice and cheap at 4.25. It's the banks that borrow it at 4.25, they push the bond market down. It drives up the interest rate they're allowed to offer to us. And that means they get to like 7, 8, 9%. They're borrowing it at 4. They're selling it to us at 6 to 9. It's bullshit. It's the big banks that are forcing the bond market down, which forces the price of interest rates up. It's not Powell. Rates are good at 4.25. Start yelling at the banks. Make these assholes stop doing what they're doing. They forced the bonds down. They forced the price of bonds where they could sell it so the bond futures go down. Interest rates go up, and then they go, hey, America, would you like a mortgage? How's 7 to 8% sound to you where we're borrowing at 4.25? Bullshit. You want to yell at someone? Yell at the big banks. Make them stop this huge spread from 4.25 to 7 to 8% and give us all loans at 5, 6, 7%. We'd be much better off. So Powell's not wrong. He needs bullets in the chamber for the next big problem. You've got to go after the banks, Mr. Trump, if you want to straighten this thing out. I promise you that's the way this works. Hopefully one day, I would love to be able to advise, just spend a half an hour and use my 40 plus years to teach Donald Trump what I know about these markets. Anyhow, back to the board. OMNI says neutral on Tuesday, and Tuesday's the first day of a 2-day Fed meeting. OMNI says don't bother trading the E-mini S&P NASDAQ Russ, go neutral. We'll do that. Cadence design explodes. Traders, I put a chart in front of you last night. I said, watch this puppy. Cadence design, it did the knock, knock, knock. It broke through. Well, guess what happened? This afternoon, Cadence reported its earnings and exploded after the opening. I will show you after the close, I should say. I'll show you that chart. Then we've got T-bonds and Jerome Powell, and I've already explained it to you. Now I'll show it to you on charts. Traders, big week. Lots of information coming at us this week. So I've sat and done an assessment. What is Jerome Powell going to say in order to convince us that there's a reason to lower rates because the administration wants him to lower rates, and it seems that he's succumbing to the pressure. What is he going to say? I promise you this. Here's what's going to happen by reading the charts. Tomorrow, they're not touching rates, but he's going to come out at his conference, his press conference, and he's going to use employment figures, and he's going to say, these employment figures give us the possibility that we may lower rates in September. There is no real reason, I promise you. He's going to have to come up with something. He's going to use employment, unemployment. He's going to use those job figures to claim we've got to lower rates. I hope he proves me wrong, but you watch. That's what's going to happen on Wednesday. All right, traders, so this is what I wanted to tell you about. Get ready. Big week. Lots of reports coming out. The employment report comes out Friday. Powell already knows those numbers. That's going to be his trigger. You'll see. So, to reiterate, for trading on the 29th, stay away from even the S&P NASDAQ Russ. Cadence looks fantastic. I've got more targets on the upside. And let's talk chart-wise now about Jerome Powell and what the bonds look like. Traders, I'm going to show you some great charts, but before we do that, you know the mantra, right? Say it with me. It helps you. It helps everybody I know, except for every now and then when someone yells at me on the internet for using this phrase. Most people seem to like it, so for the ones who like it, let's go. Are you with me? 1, 2, 3. Stops are in. Emotions are rock and roll, traders. Now let's go look at some charts. Traders, we're looking at the E-mini S&P daily bar chart. I like to call this the Trump got it all wrong rally because he did the tariffs here. Everyone in the world but me came out and yelled at him and said it was the end of the world. And here's where we are now. I don't know that was a... I don't know that Trump was wrong there. Maybe my eyes deceived me. Maybe I should be looking at the chart upside down or standing in a mirror upside down on my head. I don't know. But the way I look at this, it looks like Trump got it right so far. Let's see what NASDAQ thinks. Oh, look, NASDAQ thinks the same thing. And look at the way we're just hugging this support all the way up this rally. Does it always work? Some days you get a down day, but it looks good so far. And don't forget, it's day one of a 2-day Fed meeting. You know the boys are coming in to buy this after the Fed speaks, especially when Jerome Powell finds a bullshit reason to claim he's got to lower rates next month. You'll see. It'll be a BS reason, but he'll do it. Here's what's next. Look at this. Traders, you seen this in last night's video, and I said, look, I want to show you something. Keep an eye on this. Cadence, Knock, 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 and now it's through the knocking. That's it. It's time to blast off. This thing was trading at around 330s, right in the 330s when I showed it to you. It's trading in the 360s right now, baby. It got over $30 higher since last night when I showed it to you. Now that's analysis, baby. Nobody pulls that off. Nobody but the OMNI Trading Academy, I'll tell you that right now. Then there's this. Here's the reason why I presented this video to you. This is a long picture of the 30-year bond market on a weekly basis. That means every one of these bars here is a week's worth of trading. Look at how long interest rates have been going basically up for. Because when bonds go down, interest rates go up. Whether Jerome Powell says a word or not, that's automatic. So the Fed can keep rates at 4.5%. As the bond market drops, that gives banks the chance to offer us the rate at 7, 8, and 9%, because that's what they get to do. Now I'm going to blow this chart up a little bit, just give you a little more and show you what's been happening here. When bonds go up, interest rates do go down, and it was working. This is a weekly bar, so you had a month, 2, 3, 4, you had 6 months of upward, and rates literally were starting to go down. Then we hit that spot right there, and interest rates started to go back up, and that's all we've basically had since. And it looks like we're going to break through the bottom. Knock, knock. We're going to knock again here. If we keep knocking, we're going to break through the bottom. That raises interest rates even more. So that's what we're looking at right now. The bond market is where the problem is. Banks are forcing this to happen to force interest rates up, even though Jerome Powell has done a good job at keeping rates down and is probably going to lower them again. But all the banks have to do is drop the bond market, and it's as if Powell did nothing. So the bonds are good. The interest rate is good. It is our big banks that we need to go after and teach these guys a lesson. It's not okay to borrow money at 4.25 and sell it out at 8.25. Bullshit. How come they have such a big spread? I say we break these banks down. Traders, I hope you're with me. I hope you have a good day. I'll see you at livewithoscar.com.